Well, hello, traders and investors. I'm LA Little. This is your daily NeoTA wrap. Take a look at these markets. I'm doing it from a neoclassical perspective. We're looking at supply and demand on the charts, and we're using that to make decisions about how to manage risk, how to manage your portfolio. We use the neoclassical model, which is supply and demand on the charts, gives you good probability statistics that you can apply to both timing and to trend continuance. I go over those concepts a little bit here, but of course we go over them a lot more on the site and for members of the community. And if you're interested in that, all you have to do is give me a email. Just shoot me an email, and you do it at my email address here at TA Today, and that's TAT@TAtoday.com. I'd be happy to talk to you, tell you what we do, how we do it, what the model is, how the model works, and lay out the plan, and then of course interview you to some extent to understand if what we do might be a good match for you, because if it isn't, then there's no reason in either of us pursuing it. As far as this market, let's look at the numbers here. Pretty red day on the downside. Remember, you had the big spike yesterday. Today you give it all back, and you give it back in spades. Gold, silver, smack down, as was oil, as was the bonds, as was all the equities. Straight across the board, folks. Unless you were in Europe, you got smacked today, and I suspect they're going to get smacked tomorrow. Let's take a look at the charts, and I'm going to start with where we stopped yesterday, and that is on the financials. Remember, we were talking about the financials being so strong. Look at this bearish engulfing here, right? You just had a big move to the top side. We were actually talking about the ABCD structures being as large as they were. Big move to the upside, and then before you get up there, big smack down. Volume slightly less, right? But that's a bearish engulfing, folks, and that's not a good thing. What that tells you usually, especially after a run like this, and especially after a big gap up like this, is that whoever got caught on the wrong side of that trade yesterday, they covered. They got squeezed out of their positions, and what happened? There weren't any more buyers. There were no more buyers to take it up higher and higher and higher. When you don't have any more buyers, price is going to fall, right? When the demand is just not there, you're going to get a pullback. That's what we saw today. And the only way that you can turn this is you turn it right away. In other words, tomorrow you want to see this thing get right back up and go back the other way. If you don't, you're going to find yourself down in here and potentially even lower before you know it. So that's what we saw in these markets. And in my opinion, that was short squeeze at the top. And there was actually an article about it we discussed in the mentoring meeting this morning. And I said, I don't know if it was short covering or not. And, you never know until the day after, and you see whether or not you can hold that low of the gap or not, right? Because that's where they naturally should come in. I mean, think about where the natural buy point was. It was right here, right? It was right at the bottom. That's the best place to get back in if you missed the gap up. What happens? They take it through it, they close it at the lows, and I want to show you something else about the lows, and so that gives you some idea of it. Let me go to the S&P 500. I want you to go back and look at this chart. Is there any place on this chart since this bar that has been a close? Well, actually, there's one right there. But has there been hardly any of these, right? There's maybe that one you could kind of call close at the low. Well, folks, we have been up without a close at the lows for a very long time. And on this chart, right, you'd have to go back to these two bars back here, which is the end of December. Other than this one little one here and kind of that one there, right? So maybe you could count, say, 2 bars since the end of December, a close on the lows. That's what you got today after a spike up. That's not a good thing. And so, even though it held right here, tomorrow is a crucial day for this market, because if this market starts to roll, you're going to see a decent sized pullback. And there's not much to support it. Yeah, you got some green zone up here. That's your anchor zone. That's the place you'd expect some buyers to come in if they're going to. But there ain't much between there and all the way back down here where all the consolidation had taken place, right? All this consolidation in this area. Up to here, there's almost nothing, right? Just straight up. And so if you don't hold it up here, you got a good shot to blow it out there and bring it down deeper. I don't expect this market to crumble, but you know, we have been on a heck of a run, folks, and you don't stay on those runs forever. At some point, you know, what you've done or what you've seen is not what you see anymore. And I would be careful to think that this is just going to continue. More than likely, you're going to see some sort of consolidation at least before long, if not now. So on the S&P itself, the index, not so bad. I mean, it did hold it, but it was almost a bearish engulfing. But if you look elsewhere, you essentially got that. You close back at the lows or below the lows. Yesterday's low here on the NASDAQ Composite, 58.65. You close at 58.56. If you look at the NDX, you got the same thing, right? You got the push up. You close it. Actually, the NDX held it. It's the Russell, I guess. Was it? No, it was the NASDAQ. The NDX held 53.55. This one closes 53.63. Finally, we go over to the Russell. And even though this had a big bar to the downside, it also closed inside of it. It took about, what, 3/4 of it away. So there is hope for the bulls, but in my opinion, they need to do it now. They need to take it right back the other way. If they don't, I think it's going to be a very sloppy trade starting to set up here finally. Let's go to the sectors now. We already saw the financials, and it wasn't, again, just like we talked about last night, it wasn't just the big cap financials, it was across the board. Look at the small caps. This is the insurance that also got smacked, but I'm going to go into the small caps here that we looked at last night, KRE. A bearish engulfing there. If you go to the KRE itself, look at the bearish engulfing on this huge smackdown. That was after a big push up. I mean, it was a 3% move yesterday. You give it all up and more today. This market is signaling some issues if you're looking at the financials. I mean, they were carrying it, but they certainly didn't carry it today. If they carried it anywhere today, it was to the downside. We had, of all the indexes, we only had one or two that were sporting any kind of issues up until today. One of them was the transports. And the reason for it, if you go back, remember we even talked about this, if you go back and look at these two bullish retest regenerate zones, what happened is you got underneath it there. Now usually when you get underneath it and you come back over it, you're going to try to test the top, and this one actually went and made a new one. But here you come back to the downside, you're back into this swing point high now. If this can't hold here, folks, I do think, in fact, this sector is going to have a lot more trouble. So I think this is one of the sectors to keep an eye on. You know the Dow theory is premised on that one, but you actually had bearish engulfings in a number of places. XLB, bearish engulfing. Let's look at the rest of them. I didn't see them all. Let's just quickly span them. Here's the XLI. That was basically a bearish engulfing too. You have an inside date on the big cap technology, the XLY, excuse me, XLK. XLP, again, safety held up, utilities held up, even healthcare held up okay. It was up most of the day, inside day, and the XLY also held inside day. So when you look at the sectors, yeah, you got a little trouble starting to brew. Some bearish engulfings out there suggesting that this may be a little bit of an issue. But then again, the market still, you got to give the bulls a little bit of the benefit of the doubt. And the reason for that is every time so far, right, over the last 6 months almost now, every time it looked like they were going to fold, then all of a sudden the buyers came in and swooped in and started buying stuff. So you have to give them the benefit of the doubt, but I do think this is a very sloppy market up at these levels. I want to show you something else that was happening today, and that is the currency markets. I use the UUP because we have volume on it. versus currency pairs. And let's see what this one did. So you got another ABCD up. Looks like it completed it already too. The little nested one that's here. ABCD structure there, completed. And if we look on a bigger term, let's look at the weekly. 2, 3. Yeah, and so this, if you view this, this was the bullish retest regenerate, right? So you got deep into it, had volume on it as you came down, but it held. Now you're trying to regenerate to the top side. And that's what you would expect on the first trip down, or even the second trip down, you still have a good chance. Now, if you make the third trip down, it gets a lot more dicey and the odds are not in your favor. So right now, this is a critical push. So that's the bullish retest regen zone. The other thing that's happening here is you essentially have two ranges, right? And I like to see them about equidistance, which is about what we have here. You got two ranges. Last week you got up into the top part of that range. This week you're up there again. I like that kind of action because if you can stay up in the range, the top part of the range here of these two, you're going to try to get to the top side, which means you're going to go test those tops one more time. And if you look at this on a very long-term basis, I'm going to pull over the monthly chart. On the monthly chart, right, this has to get over those highs, but this was a huge run up. And if you can get back over those highs, this could be a nice big spike to the upside again. And that is probably not what the market wants, nor has it ordered. Finally, let's take a look over at that gold market. Gold market really smacked today. Let me grab that. And there was no place to hide today. Unless you were in the dollar, that was about the only place you could hide. But if you go over and you look at the gold stocks, these have been getting sold down. Big push to the downside. If you look at it on the weekly, two large red bars now after a nice big run up. You're kind of in a critical spot here to hold. You actually can get a little deeper. The key spot is down in this area. You got to hold that one on the way back. Otherwise, this was just a bounce, folks, and something deeper still could take place. If you pull over the monthly chart, you can see what I'm talking about, because here, you know, you have the potential for a nice ABCD structure to the top side. Now, this doesn't mean it's not going to happen yet, but you know, you don't want to see this become an ABCD down back to the lows. That's definitely not what one wants to see. You got nice volume coming in off those lows. Now, volume not nearly as heavy as you're popping up here this start of this year. Critical juncture here for a lot of things, including the gold market. That's it for tonight. Tomorrow, to me, critical day. You got to see this market bounce right back. If you don't, you're going to see this market start to give it up finally. And I'm not talking about crash, folks. I'm just talking about short-term top stuff. Have yourself a great night. I'll see you later.